Morning, ladies and gentlemen. This is Greg Mikulowski from FXDD, and this is Thursday, March 18, 2010, New York opening Forex report. Let me remind everybody that trading Forex is risky and should only be done with risk capital, not change your lifestyle. Traders could lose all the risk capital trading Forex. FXD does not guarantee any recommendations made within its commentary. Traders should make market assessments and take trading positions based on their own personal market analysis, risk tolerance, and financial condition. In addition, care should be made to only use leverage which is congruent with your personal risk tolerance. Although care was taken in creating this report, FXD does not guarantee the accuracy of the information. Some news in the Eurozone overnight, which has helped the euro move lower, was that Greece is getting pessimistic about their aid, especially from the Eurozone. They're fear that they may have to go to the IMF, which is something that they do not want to do. They also fear that the cost of the borrowing, which is 310 or so basis points above German equivalent yields, is not something that they can sustain, not something that they can use to lower their budget deficit. So they're looking for some sort of aid from the Eurozone specifically in order to be able to get that deficit situation down from about 12% of GDP to about 8.7, 8.9 or whatever of GDP by next year. This is going to be a difficult measure, and as a result, we did see the euro come off in the UK. We did have budget deficit numbers come out better than expectations. They showed a $12.4 billion pound deficit versus a forecast of $14 billion. This is good news. This helped the pound sterling move up off its lows. In Switzerland, we still await the some sort of Swiss intervention, perhaps in the and there is a speech later on today that may shed light as far as when the Swiss franc or the Swiss National Bank may come in and help or not help weaken the Swiss franc as it continues to move in a one direction to the downside. Well, let's take a look at those, some of the markets. We'll start with the euro versus the U.S. dollar. Again, that currency suffered today as a result of the Greek situation, and the level that we were looking at last night was this 100-hour moving average. We saw that the 100-hour moving average was tested on a few different occasions yesterday, and specifically right here and right here. The market was able to bounce off that level nicely at this move right here, but we ran into the resistance up here at the 75 level. You can see all the different areas at the 75 level where the market on an hourly basis had found resistance. The other thing that we noted in yesterday's reports was how the market had been holding the 200 bar moving average, but this time when the market moved below the 100 bar moving average, we stayed below that 100 bar moving average in quiet Tokyo session and then started to move to the downside. In the process, we also went through this trend line. I'm going to zoom out here to show you where that trend line comes in from. You take these lows, 1, 2, 3 lows, and we actually held this trend line for most of the Far East session. Then when we broke through it, the market really started to gain some more momentum to the downside here, making its way all the way through to the 200 hour moving average and going and testing this old trend line here. And I got to kind of move out and show you where that comes from as well. You can see that that comes from the lows, 1, 2, 3 lows, and so we went and tested that moving average. Now I'll zoom back in. That moving average bounce kind of stayed in here, and then when we fell through there, we saw the quick move to the downside. Now we're seeing the move back up. So as we enter the New York day, we are in between our goalposts here. Our goalposts are defined by the 100 bar moving average and the 200 bar moving average. That 200 bar moving average currently comes in at the 136.81 level. We'll be watching that. You can see on this last hourly bar, which just really got started here about 7 minutes ago. The market came down, tested that line, and bounced higher. So we'll be watching this level again. It comes at 136.81. We're only trading at 136.85, so don't get too excited here. We're going to have to hold that support in order to push the market to the upside here for the euro versus U.S. dollar. A clue for the market may be this 100 bar moving average here, and you can see how the market is kind of testing that. We tested it. We fell through it here came down to support here, 50% of the move higher of this move from this low to this high, came, tested that, moved up, tested the 200, failed up there, and then started to use 100 as resistance here. So if the market can, is at a key level right here, 136.89 level is the 100 bar moving average, and we know on the hourly chart as well, we've got the 100-hour moving average. So really, in the next 15 minutes or so, the market will have to make up its mind which way it wants to go. I said the sterling had a better deficit here today. Before that, the market was pressured along with the euro down to the 152.39 level. What's the significance of 152.39? Well, I had that line in there going back to this period right here. This is that Friday and Monday gap that we saw on the hourly chart. The market had a low of 39 here on Friday, and we reached a high of 152.06 on Monday, and that gap wasn't filled until we came into this week, when the market finally was able to break above that, or come up to that break above that 39 level and move higher here to the 39 level. So today the market remembers these levels and comes down to 39, and we get the bounce up to the upside on the deficit situation. You see the prices now come off of the bounce area back down here. So let's take a look at the 5-minute chart, see where that's telling us lots of volatility. This move sharply higher, that would be expected, but it looks like the highs for the day held the move to the upside, and we found the sellers in there move back below the 200 and 100. So we're going to be watching this 152.91 level. That's the blue line. That's a 100-bar moving average in this chart as a resistance to the top side for that currency pair. Let's go to the dollar versus yen. The dollar versus yen broke through the 90.07 level. What's the significance of that? That is the 100-day moving average. That's this blue line right here. The 100-day moving average coming in at 90.07 here today. The market fell below that level when we saw stops moving the currency pair down to the downside here. You can see the 90.07 level. The market broke through that level and started its move to the downside. The low for the day came in at 89.75, but the market is back above the 90.07 level, trading at 90.22. So like a boxer getting hit, it keeps on getting back up each time the market moves below the 100-bar moving average. It starts its move back to the upside, and we're seeing that again. The resistance still comes in at the 100 and the 200-bar moving average, 90.36, 90.43. As long as we may see a move back up to test that 200-bar moving average. You can see we've been below for most of the day here. If the market fails at that level, we could see further pressure back to the downside. If we get it back above it, the 90.72 level is going to be a key level to the upside for this currency pair. Most expect the dollar yen to do a little bit better. The Bank of Japan cut their rates, or added more liquidity in the market here this week. That should keep the yen weaker. We'll see how it all pans out, but right now the move back above the 07 is positive, but we do have to get through the next resistance level up at this 100 and 200 bar moving average up above. Dollar versus Canada, we saw that market move to a new low off the hourly chart. We came down to what is that, par 70.69 level yesterday. We do have support at par 73, 74. If you go back to the last time the market as at this time, you'll see that level very clearly, and the market has moved higher, but we are coming under pressure here after moving higher early in the day. We still remain below the 100-bar moving average. We tested it on this day right here. Didn't really quite get anywhere near it right here. Tested it here, failed here, failed at the 200-bar moving average here. So the 100 and the 200 continue to remain our topside resistance for the dollar versus Canada. We'll be watching those levels very closely. The 100-bar moving average currently comes in at the 101.57 level, so we'll be watching that on the upside, and we'll see how that all pans out here. Yesterday the market closed at the 101.02 level, currently priced trading 101.01. So we'll be watching that par level, 101 level. Market moves back below the level. Look for further pressure in the dollar versus Canada. In the Aussie versus US dollar, the market continues or actually came off of its highs here last night. The key price or key level to look at is off of this daily chart, 92.54. That's the high trend line off of here. Yesterday we went up to test that line, making it to 92.51, and coming off today's high came in at 92.41. We'll be watching that level on the top side for the Aussie versus US dollar. Other than that, we may see further corrections in the pair. We do remain above the 100-hour moving average, keeps bias to the upside. That 100-hour moving average comes in at the 91.73. We'll be watching that level closely, taking a look at the 5-minute chart. We've been maintaining the price below the 200-bar moving average, but above the 100-bar moving average. So we have to get above the 200-bar moving average. 92.21 to concern to the upside. 92.14 is the downside for the 100-bar moving average. Today we have a consumer price index for the U.S. plus 0.1% expectations. Ex-food and energy, it's supposed to be plus 0.1 as well. There's no inflation, folks. Initial jobless claims are supposed to come in at 455 versus 462. We'll be watching that very closely. And Philadelphia Fed Index 18 versus 17.6. Thank you very much. We'll talk to you later. Bye.